That's inefficiency.
Thank you.
Yeah. I thought we were done with everything. We're just coming here today to chat with each other. So, okay. So, congratulations. We are moving ahead. Let me see. Very cool. So let's just quickly refresh our memories of what we've done so far. Then we can proceed to the next part of the education. Okay. I want you guys to also remember that the outcome of our session is going to be mostly dependent on how you guys interact with me. Because the more the interaction, the more I can contribute to what I'm sharing with each other. Okay. So this guy here. So today we'll be going into intermediates. So we'll be looking at external and internal structure. Then we'll be looking at liquidity. Okay. Time frame structural analysis is going to be ruled out. Why? Because you will only get to understand this when we get to trading plan, or you get to understand this as we proceed. It can't be taught independently. That's why I realize. Okay, it can only be taught as we are explaining every other thing. We'll be chipping this thing gradually. Then when we talk about trading plan, then you have this guy better structured. Does it make sense now, everybody?
Yeah.
Yeah.
Good. So to start with though, let's just quickly recap everything we've done so far. So let me just ask questions here. Everybody understands what the basics of market structure is and how it can get fucked, right? Everyone understands retail and smart money concepts and how we get fucked over, right? Using the MSU more or less, right?
Yeah.
Everybody understand what an order block is and how it can be referred to as the buy to sell, the sell to buy, and then the sponsored candles, right?
Yes.
Everybody understand demand and supply as to the entire buy to sell, the entire sell to buy, which is the market in itself, the entire market in itself. Then every other thing within that marketplace is what? The stores in the marketplace where you can pretty much transact in any of the stores, right?
Yeah.
Anybody got any questions before we proceed?
No.
Nobody. So it's clear. Nice. Well done. Today, we will be looking at this guy, which you already know by now. That's one thing about those first two sessions. It's too powerful. Every other thing here becomes really, really cheap. External and internal structure. External and internal structure. It is at this point you're going to learn a number of things about structure. See, I'm still going to rearrange my curriculum to include a number of things, but not to worry. I am actually going to tell you guys what those number of things are today. I'm going to explain them to you. I'm just going to add it later, but I'm going to talk about everything to you. Okay, just keep me talking and you have everything complete. Okay, now, we all know generally in Forex, if you're looking at the market, we're like, oh, before you trade, what's the first thing you're advised to do? Top-down analysis, right?
Yeah.
Yeah.
So now, when we're doing this top-down analysis, we'll go to, let's say we'll go to the monthly time frame. So let's say my monthly looks something like this. Okay, my monthly, that guy is not looking fine in my eyes. My monthly looks something like this. Then what do we say is internal? So we now say monthly, if monthly is the external structure, for example, say weekly is the internal structure. True or true?
Yeah.
True.
Yeah, true.
So now if we take it that way, like that, so we say monthly is external, then we say internal to monthly is what? Weekly. So if weekly is external, what is internal to weekly?
Daily.
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 If daily, pay attention because that's why I was saying earlier, time frame structure analysis is hidden in between all of the education. So this is still part of it. So now, if daily is external, then internal to daily will be what?
4 hour, 1 hour.
4 hour. Let's go with H4.
Okay.
So if H4 is external, internal to H4 is what?
1 hour.
H1.
1. If H1 is external, internal to H1 is what?
15.
M15.
30.
M15.
And 30.
You see that? Internal to H1, when it comes to intraday trading, when it comes to understanding the algo, because the best thing to do with to understand the algo is to go with the time frames that keeps you closer to that understanding. And when it comes to H1, internal to H1, what I do is I pay attention to 2 time frames essentially. And the 2 time frames, the first one is what? M15. And the second one is what? M5.
Yeah.
The best time frame for intraday trading is M5. I want to get everybody. The best time frame for intraday trading is M5. However, you can't trade the M5 time frame without understanding the M15 and the H1. Okay? You can't trade the M5 time frame without understanding the M15 and the H1. So you need to understand this because that's how these time frames depend on what each other. Now, let's proceed. We said M15 slash M5 internal to this. Okay, M15 slash M5. M15 internal to M15 can be what? M5. Internal to M15 can also be what? M5. Pay attention to that too. Then internal to M15 internal to M15 or M5 is M1. Now, what does this mean? Pay close attention to what I'm about to say. This means, oh shit, this means that you remember we said that M5 is what the best time frame for intraday trading, but you can't what go just jump into M5 without understanding M15 and H1. This also means that if you have seen what you're looking for on the M5, you have to go to the internal time frame, okay, not compulsorily to pick your trade, which is what the M1. Okay. However, sometimes what you're looking for, you might not see it on 5 minutes. You could see it on the 15 minutes, and you just go to M1 and pick your trade.
Yeah.
That's why M1 is internal to both of them. What I am looking for, if I see it on the H1, okay, sorry, if I see it on the H1, I won't jump to my M1 to pick the trade. Rather, I would go lower to my M15 or M5 to see better before I can jump to my M1. After what I see here is confirmed to this, then I can come here to pick my trade. You'll see how it goes in steps. The purpose of this is in understanding the liquidity cycle, which is what we'll be treating shortly. Now, since you've understood that whole thing that I talked about there, let's look at this guy. Yeah. So if this is my monthly time frame, which means monthly is bearish, then it means I have monthly lower low, lower high, and lower low. So when we say internal is weekly, that means we expect our weekly to look something like this, right? Break off the structure. Am I correct, everybody?
Yeah.
Yeah.
Good. Then we say daily is internal to weekly. It means that we expect daily to look something like this. Everybody, this is what you were taught about internal and external structure. True or true?
Yeah.
Yeah.
True.
How well has that helped you in your training? Sila? Not very much. Let's drag this guy and then drop it here. Won't delete it, we'll just drop it there. Then let's see again. Monthly time frame. Then internal is weekly. So we have lower low, lower high, lower low, lower high, lower low. Oh shit, break off the structure. We need to buy. Oh shit, continue lower. Break off. Oh shit, what's happening? shit. Then this is annoying, isn't it?
Yeah.
However, this, let's call this A, and let's call this B. A or B, which is most prevalent in the market?
A.
It is still external structure, it is still internal structure. But you can tell which of these is objective and which of this is what? Subjective. But you see, a lot of people do not understand which is objective, which is not objective. So what do? You go ahead and then you begin to force this to look like this. For instance, you say you have low, high, then you say you have main push, you have corrective push, then you say you have main push, you have corrective push, you have low, high, then you say you have low, high, then you say you have main push, then you have corrective push, then you say, oh, we are DOSS, so we are buying here, you have main push, corrective push. Can you see what I'm talking about, everybody?
Yeah.
Yes, sir.
Then at the end of the day, what did you do? You successfully made this subjective one once again. This is why the first step towards understanding the objective structure is by recognizing every single transaction that takes place in the market. The first step towards understanding objective structure is by recognizing every single transaction that takes place in the market. You must recognize that there was a transaction here that made this price correct up to here, up to here, up to here, up to here, 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 here. You must recognize all of these transactions. A lot of people would want to ignore this and draw this like this. No, you don't do that. You don't. You see, if you have higher high, higher low, you see, higher high, higher low, are you excited? Higher high, then you have something like this. You'll be like, no, this is just, then you come here, you say, no, this is higher high, this is low, high, higher low, higher high, higher low, higher high. If you do this, stop doing that. You intentionally ignored this transaction that took place here. Why? Because you said it is not significant. What is significant and what is not significant? Tell me, how much is significant? How much? How much do you consider significant?
Everything is significant.
Exactly. If you consider $1 billion to be significant, then if you have $100 million, is that not significant too?
Yeah.
Is $10 million not significant?
Yeah.
See that? So who told you that this is not significant? What if the amount traded here that cost this small push here was $100 million?
I'll take it.
So every single push in the market is a transaction that needs to be paid, that you need to pay attention to.
Yeah.
So when you're paying attention to this transaction, where you now have your edge is comparing these transactions to the previous highs and lows that was being created. Okay, the previous major highs in terms of external and internal is the previous internal highs and the previous internal lows. That's all. So if you have, for example, you have something like this. You see, everything here is significant. However, I know relative to the previous highs and lows, this one here is still, despite being significant, is still internal to this one here. But it doesn't mean I'm going to ignore this. Okay, now I can tell for sure that, oh, this is also important. If price comes here, for example, I'll buy this sheet. Everything is significant. And you have to start looking at structure from an objective view. Are we together, everybody?
Yep.
So, you see, by the time you start looking at structure from an objective view, you'll begin to realize that all that was happening all along was not necessarily, I wouldn't say necessarily manipulation. See, let me tell you one truth today. Yeah, one truth today is, it's a hard truth, but the market is not interested in manipulating you. The market is not interested in manipulating you. The algo of the market is just delivering in a certain way based on liquidity. Whoever understands it would what? Earn it. Okay, but for us to understand it, we are the one terming it as the market is manipulating you. You can have, in the market, you can have your trade here, right? And the market comes there and drops. If it was interested in manipulating you, it would take you out at that point. But sometimes you can have your trade here and the market comes here and takes you out and drop. So you see, it is just delivering as it so desires. Your own is to understand what makes it tick and how does it deliver. And the two main things that makes it tick, number one is liquidity, number two is efficient pricing. Do you understand what I'm saying now, everybody?
Yep.
And it is not the market's fault, it is not the algo's fault to deliver that way, it is our fault. Because it is only delivering based on our emotions and our applications to it. If majority of the people trading the market start looking at a new level to pick their trade now, for example, now, you see, that's why I said somebody was like, oh, do you think the algo will change? Well, my answer to that, if you follow my Instagram story, is that the algo has already changed. The algo is always changing. But you know what? You have already become the algo, so you won't even realize that you have changed. That's the truth. Why? Because you can always tell where the liquidity is. Look at market took liquidity here. Next thing, it comes here again. And you're like, what the fuck? But you're still here trying to sell again. Because you understand that the liquidity has been taken here, it is now here. So one thing that would never change about the liquidity in the market, the algo, is the liquidity. So even if every retail trader, every smart money trader, every single trader change their trading style, one thing for sure is as they are changing their trading style, you know where the liquidity is. Now you realize that. Wait a minute. Why? That's why I told people what you're supposed to do in your learning phase is ask yourself, this is POS. Why would price take POS and continue lower? Wait. Was it that everybody saw this as break of market structure? Everybody tries selling here, and then it grabs the liquidity and then it drops. If you look at it, that's what fake POS, and that's what inducement and continuation. Fake POS, inducement, continuation, isn't it? Again, fake POS, inducement, continuation. It doesn't still stop the market from doing normal lower lows and lower highs. But where is your edge? This is your edge. Okay, when it wanted to go higher, but take POS inducement and it goes. Take POS inducement, it goes. Take POS inducement, it goes. But you don't know what fake POS and inducement is before, so all you had in your arsenal was confusion. But now you can explain this because you understand this, and now your trading can be much more easier. Does it make sense, everybody?
Yeah.
Yeah.
Even in these levels where it is efficient and it drops, you know that there's a possibility that there's what? An MSCI on the lower time frame, because for the transaction to happen, liquidity has to be provided. Remember I said every single transaction in the market would not happen if liquidity was not provided. Just like you going to the market store, any item that is going to be sold from the store, money has to be provided. Even giveaways is still paid for by someone. We don't know. I won't tell you that I know everything about liquidity right now. I'm still learning myself. I'm still learning. But I've been able to figure out the main liquidity levels in the market. And that is what I use in trading the market up and down. There are certain turning points in the market. There are certain transactions in the market. I can't tell you that I know what liquidity was taken for that to happen. But at least I know more than 70 to 80% the liquidity that moves the market. Does it make sense to everybody?
Yeah.
So let's quickly look at this guy. You all see my screen?
Yep.
Yeah.
Okay, my chart, right? I hope you guys can see my chart.
Yeah.
Not the whiteboard.
Yeah.
Yeah.
Yeah, it's a chart, man.
Now, look at this.
This is the weekly chart, daily.
This is the monthly chart.
Okay.
Now, on this monthly chart, what do I have here? Lower low, lower high, lower low. Can you guys see?
Yeah.
If we go to the weekly now, what do you think it might look like? Do you think we'll be having lower low, lower high, lower low, lower high, lower low, lower high, lower low. Oh, break up the structure, higher high, higher low, higher high, higher low, break up the structure. Do you think that's what you're going to get?
No.
Because liquidity needs to be provided for this market to move. So you're more than likely going to get something like this. See that? Can you guys see?
Yeah.
That's what you're more than likely going to get. So let's go to, we know what the monthly looks like. Let's go to the weekly. And here we are on the weekly. So on this weekly time frame, what do I see? Let's go together. Lower low, lower high. Lower low, take US inducement continuation. Can you see that?
Yeah.
Now, I want you guys to notice something here, okay? Because I'm still teaching you guys about structure. Notice something here. Do you see that you can actually mark here as lower low, lower high, and then lower low?
Yes.
Good. Everybody sees that, yeah?
Say that one more time, please.
Yeah, you see that the way this candlestick behavior is here, you can mark this as lower low, lower high, and lower low.
Yeah.
But if you notice, I didn't mark it that way. The way that I mark it, the way I usually mark my structure, excuse me, please, now, the way I usually mark my structure is based on the colors of the candles. I know that there could be a correction here, but on this particular time frame, does it show me that there is a bullish candle to indicate that bullish pressure? Does it show it here? No, it doesn't.
No.
So since it didn't show that to me, I would never mark this as a correction on this time frame. On the lower time frame, yes, I would, if it shows it to me on that time frame. So that's why I'm always saying, mark that only which you can see on that particular time frame. If you need any information, again, about it, go to the time frame where it is clear. Is it clear, everybody?
Yeah.
Yeah.
So you see, at this point here, when price, it was easy for me to know that my next high was here, which could be the next inducement. All of this, whatever happens in between here, has to do with what? The internal structure to the what? Weekly. Let me use this guy. So you see, on this weekly, you have this low, right? Then you have this low. Sorry. Let me do this. Then you have this low. Then you see this right here. Can you guys see? This right here is a weekly structure. Okay, this right here is a weekly structure, but I'll come right into it shortly. Then you have this high. Forgive me, everyone. Forgive me. I'll have to stop here and go back to the whiteboard and explain something to you, so we don't come back to, so you just go with the flow once and for all, not get confused. Okay.
Okay.
Now you understand what this is, and that's exactly what I'm showing you on chart, and you're already saying it. But let's quickly look at this guy here. Still on internal and external structure. I have this push to the upside. Oh shit, I should have recorded this. I have this push to the upside. Now, there is no other thing, right? So technically, this is my external structure, isn't it? Let me make it a little bit now. This right here, from this low to this high, is what? External. The internal structure is going to be anything that is between this high and this low. Are we together?
Yep.
Now, if you notice here, when we draw the external structure, we have the internal structure drawn. True. So you see, this particular external structure, let us not forget the fact that it also has its own internal structure. Now, green represents the internal structure, black represents the external structure. My black is drawn again. What most people expect is this, and then this. Then you say you have what? Again, internal structure. And then when price finally becomes higher, here you say you have external structure with its own internal structure. This is the expectation. I want to believe everybody knows this already.
Yeah.
Yeah.
Good. Now, where confusion comes in is here. Confusion comes in when you have your black, which is supposed to be your external structure, looking like this. Then it goes up again. Then it goes down. Then it goes up. 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 Now, let's assume that this black is our 5 minutes, and then the green is our what? 1 minute. Are we following?
Yep.
Yep.
Now,
Yep.
does that still make, since the black is our 5 minutes and we have this black here as 5 minutes, does that still make all of this here an external structure or an internal structure? That's the question.
Conventional teaching is that black is internal structure.
But the black is the 5 minutes, and the 5 minutes is the external structure. The 1 minute is internal to the 5 minutes. Now the black gives you significant, that what you have here now is significant structural points with the black, which is the 5 minutes, sitting here on this, sitting internally to this significant structural point too. So what do you say? Do you call this black here as internal, or you call it external? Remember, let me show you something. Remember, you still have your 1 minute looking like this.
I'll class it as external.
I'm listening, please. Everybody contribute. This is the biggest challenge of most people, most Forex traders I have taught. That's why I'm adding it to the what's happening.
Well, as I say, I mean, all retail and most smart money concepts teach that even though, okay, that black is 5 minutes, because it's in between the structural points that we have been taught, that is internal structure.
So you see, the thing is, because you see this as internal structure, okay, because you see this as internal structure, if you follow your trading plan, for example, when you only have to pick the trade, when you see liquidity grab on the 5 minutes, for example, you would never catch a trade between here and here because you will still be waiting for the liquidity grab.
Because people are expecting it to go outside of that external range. But
Exactly. You expect it to go outside this and then maybe come and take this next.
the
before you can
liquidity
decide to
will
take a
happen
trade.
inside of that range.
Right.
Exactly. Meanwhile, inside of the range, you can see there was a liquidity grab here to sell, and there was a liquidity grab here to buy.
Because it's still your 5 minute time frame.
Exactly. Is it making sense, everybody?
It's to me, yeah.
So what you need to understand is this. If you see these trades, yes, you can pick them because that is a significant structure clear to you on the 5 minutes. So what this black is, in as much as you have this 5 minute structure, it is still a 5 minute structure, right? It is still sitting internally. It is still internal. However, more than internal, you are going to see these other ones, the ones sitting inside these two levels. It is called the 5 minutes. Let me use another color for that. The one sitting inside that level, those blacks, is called the 5. Let me not use this one. Let me use this one. Okay. All these ones, everything sitting inside the black, inside the external, they are referred to as the 5 minute substructure.
Substructure.
That's why I call it.
Yeah. So you've got external, you've got internal, and you've got substructure.
Yes, sir. So that substructure is making you understand that this structural point belongs to this time frame. However, it is sitting internally. So if I'm going to pick a trade based on that substructure, I still need to follow the rule of looking for the liquidity grab and going to my 1 minute before I pick the trade. Hope not too complicated, everyone.
Yeah. So basically, it all leads to liquidity.
Yeah, it all leads to liquidity. So exactly, again and again, you get back to liquidity. So you see, so the internal structure, which is the 1 minute, is less important than the substructure. The substructure is more important than what? The internal structure. It is more significant than the internal structure. Does it make sense now, everybody?
Yeah.
Yeah.
Quick question. So just make sure I wrote it down correctly. You're saying in this scenario, the 1 minute internal structure is less significant than the 5 minute substructure, correct?
Yes, it is less significant. The 5 minute substructure is more significant than the 1 minute internal structure. They are still both internal.
Okay.
Until price takes out this side.
What was the last part? Until price takes out that high, you say?
Takes out this high, yeah.
Okay.
Then all of these are just substructure. This is the new external structure. And everything that comes in between here now is going to be internal or substructure. Now, let's go back to that chart. I'll show you. So you see here, can you see this structural push here is clear to your eyes here on this time frame? True or true?
Yeah, true.
Which means it is significant. However, relative to the previous highs and the previous low, this is just a substructure. The usefulness of this substructure is mostly in the lower time frame, not in the higher time frame. When you go to the lower time frame, there is a huge possibility that a trade will more than likely happen in this zone of the lower time frame than in this zone of the lower time frame where you don't have the substructure. That's why I said it is more significant than the internal structure. Is it clear, everybody?
Yeah.
Yeah.
Right now, if you look at this closely, price goes high, this high drops. This was what in previous major low, all of these were substructure. When price took out this low here, hold on, I like being precise. So let's see. So price took out this low here, right? When it took out this low, the next major structure is where? Here. You see, these are weekly structural points. However, they are what? Substructures. The best time frame to work with this substructure will be the daily time frame. That's what it means. It doesn't mean that you rule it out completely, but it helps you to have a clear structural bias. Then what happened next? Price goes here. Don't worry. All of this will help you see how useful it is when you get to the one. You have this guy who comes here. You have this guy comes here. Can you see how this guy came here to regain efficiency and dropped? Everybody see that?
You see, it stayed, what's the question? Sorry.
Can you see how it came here to regain efficiency?
Yes.
And then it dropped. It didn't bother come. It does not have to come to the other block. This concept. As a matter of fact, I cut this straight from this top here, this very top here. I cut this straight. I'll show you if we get when we get there. Okay. Then you see, look at this. When this was taken, the previous low was here, this low, right? Then price came here. This is a single candle. Okay, this is a single candle. Indicating, look at, when this candle closed, it was here, which was still below this low. Then we had this correction that led to this. This shows you a bullish candle, which is a correction candle. However, the correction started from here and ended here. I taught you guys hidden demand and hidden supply, right? No, I didn't. I skipped it during your time. I remember now. So now I'll talk about it shortly. So this, if you understand what I'm saying, this stopped here, corrected, and then dropped. Everybody sees that?
Yeah.
So this correction here, despite the wick being below this correction didn't happen after this low was broken. So yes, there was a transaction here, but that transaction is still internal compared to this external structure. Does everybody get it?
Kind of.
Yeah.
Not me much, sorry.
Yeah, that's it. Please pay attention. Structure can be tricky. And once you know structure, forget about it. Every other thing is a piece of cake. This
Yusuf,
candle.
Yeah, Yusuf, can you go that? Yeah, go over it again once more.
Let me.
Just
That's
a
why
bit.
I'm zooming in on it. You see, this candle closed here. Now, look at, there's something called hidden supply and hidden demand, right? It's a two candlestick formation where you have something like this. you look at this closely, you would realize that what really happened here was open, high, low, close, open, high, low, close. At the end of the day, what was that? Lower low, lower high, lower low. Therefore, giving you this level as a supply level, because technically this is what buy to sell. You guys see that now?
Yeah. No, makes sense.
I know we didn't talk about hidden supply and hidden demand, so that's why I'm talking about it now. So this is what we call hidden supply and hidden demand. So this is for hidden supply, then the reverse is hidden demand. So that is in anatomy of candlestick. That's how you understand candlesticks. In the anatomy of candlesticks. So here, if you look at this closely, if we had boom, and then this correction, this bullish candle here happens, and then we have boom, then we say we have lower low, lower high, lower low, lower high, right, everybody?
Yeah.
Yeah.
But that wasn't what we had. What we had here is price came down to this level, which is lower than this. Right? That price came here, which is higher than this. Then the correction happened, and then it dropped.
Makes sense.
Yes, it dropped. Yes, it's a bullish candle. However, that correction didn't happen after. That bullish candle was not created after this low was taken. It was created before this low was taken.
Yeah, makes sense.
Yeah, I get it now.
Exactly.
Yeah.
So given that instance, this here is nothing but a substructure. This is the main structural push right now. So if price is coming up now, given the weekly time frame, the next level of inducement is here. Is there liquidity here? Of course there is. What kind of liquidity? Wait till we get to liquidity and you will know the kind of liquidity that is there. Does it make sense now, everybody?
Yeah.
Yeah.
Awesome. So you see, that's the weekly time frame. That's the weekly time frame. It shows you fake VOS inducement and drops, fake VOS inducement and drops. Then it gives you lower high, lower low, lower high, lower low. When you go to the internal structure, which is what? The daily time frame, what does it look like? Aha. See? What do you have there? You have, let's start with this. Uh-oh. Let me change this. You have lower low, lower high, lower low, lower high. And you see substructure. Can you guys see the substructure?
That there is candle.
Yeah, this one here. It is going to be significant. It's going to be significant on what time frame? On the 4 hour.
In each 4.
Yeah. Okay. That level where you have substructure here is going to be more significant than any other thing you have here on the H4. That's what it means. Now, you have lower low. Right? You have lower low.
Yeah.
Then you have what? Inducement. Now, if you do not pay attention to the substructure, you would never see this trade, then again, this one, fake VOS inducement, you would never see all of this trade. Take BOS inducement. Do you guys follow?
Yeah.
That's why you don't ignore it and you don't confuse it. That's the substructure. You don't ignore it, you don't confuse it. Okay, what you should do is on this particular time frame, not lower, on this particular time frame, take notes of where you have that substructure. And you're like, oh, if I have an inducement of this substructure, that should be significant. Then when you go to the 4-hour, you'll be like, wait, what is here? You monitor closely, you will get better trades to trade into the daily time frame itself or out of the daily time frame itself.
Yusuf, why can't why can't that be internal structure?
It is not internal. It is not internal because you can see clearly that there was a correction here on this particular time frame.
Okay, yes.
It is internal, it is an internal structure, but it is a substructure that is internal because you can see it clearly on this time frame. The ones you can't see clearly on this time frame would look like this here.
Yeah.
When you go to the lower time frame, that one is completely internal structure, which belongs to the lower time frame.
Yeah. And also, my other question is, does the substructure only happen in a pullback, or can it also happen?
The substructure happens in between that and this. To answer that question better, let me go back to the whiteboard. The substructure only happens in between the external structure that has been created.
Yeah.
It doesn't, you can't say, of course, it is more or less going to be a pullback or retracement, but like I said, it depends on how the market is at that particular time. What you need to know is have properly identified your structural levels. You can see this here, for example, this low and this high. This is not a pullback, but there is a substructure here because it's in between this low and this high. Take your time to study this. This has been the major challenge for a lot of traders in the community that I realized. If you go through the session, there's a session in the community that says trading challenges. If you go through that session, you're going to go back to when I created that channel. You're going to realize that most of their questions were based on structure, their confusion, their challenges. That's when I had to organize the structural community sessions, and I explained all of this to them. Then after then, I noticed significant improvement in their trading.
Can you go back to the chart for quick sec, please?
Yes, boss, I can do that.
All right. Okay. Let me annotate for a quick sec. Just to make sure I understand you correctly. This here is a lower low. That's the lower high, right? And you're seeing this right here.
Depending on where the previous structural point was.
Okay.
You have to follow the story. You know, I won't just speak here and say this. I started the story from here: lower low, lower high, lower low, lower high, lower low. So which means these are the last two structural points. So finally, price broke this high. At this point, that's where it broke first, not low. So that makes here the next structural push.
Okay, so this was the lower high, this the lower low. And I'm saying this right here is internal substructure because it's in between these two structure points, and because we can actually see the difference in color candles.
Exactly.
Whereas this right here, we can't see the different color, the bearish candles. So therefore,
Yeah, we can't see this one here. So that's going to be, let me show you.
on the lower
Exactly.
time.
Exactly. Right on that one, you get it.
Got
So
you.
let me
got
show you. Let me just quickly jump to that 4-hour time frame, and you guys will see what's there. Can you see that when you come to the 4-hour time frame, it is easy to tell that here was efficient. So when it became efficient, there's a structural level here to pay attention to. On the 4-hour, it was easy to tell that all of this here was a substructure on the daily, and this is the 4-hour structure technically, depending on how we start building our story bullish. Then if I can't see that as my 4-hour structure, it could be the 4-hour substructure. When price broke this level, I know that substructure is efficient. I can pay attention to this level next to possibly catch a trade. And watching this level next, if I go to the 1 hour, for example, I would have seen something like a fake was here. I would have seen something like this, and then I'll buy this guy. I remember buying this guy anyways. You guys get the logic gradually. Don't worry, it will become really, really clear with time, but I hope everything is sinking gradually. Structure can be really, really crazy. Is it clear?
Yeah.
Getting clearer.
Yeah.
Look at that substructure that we eventually had on the daily. On the 4-hour, it gave us big viewers, adjustment, and then jumps. Let me ask you guys one question. Look at this entire market here, from here all the way to this low. Show me the inefficiency here, if there's any.
So Yusuf, what did you say?
I said, look at this entire market from this place here to this low here. Show me the inefficiency. If you look closely, you will see that there is no inefficiency at all.
Yep.
And you guys see there is no inefficiency.
Yeah.
Price hates being inefficient. It hates it. The moment it left this inefficiency, what did it do? It covers it. Price hates being inefficient. Let me quickly show you another one. Look at the weekly time frame, for example. Let's look at this weekly time frame. Can you see that the inefficiency down here was acting as a magnet, bring price down? Because everything here, the only part that was inefficient all along is here. You see that? The moment it left this zone, the only inefficient level was between here and here. It quickly covered it and then dropped.
Say that again, please. Kind of mumble.
I said the moment price took out this low, the inefficiency was between here and it quickly tested it and then dropped. Price hates being inefficient. It's just like a human. Human wants unlimited. So we are always working, striving to what? To fulfill our want, to satisfy our wants. And once we satisfy it, we are looking for the next one.
So does that mean then it's quite possible that price is going to come down here because of the inefficiency?
Given the weekly time frame, the only point of inefficiency down here was this marketplace. So now you're in the stores of the weekly. Price can choose any of these stores to react. That's fulfilled its inefficiency on the weekly time frame right now. So if you're looking for something on the weekly, you're deceiving yourself. Does it make sense?
No, repeat that one more time, please.
If you're looking for an inefficiency based on the weekly, you're only wasting your time because this is the last marketplace.
Yeah.
I pointed this out weeks ago. Hold on, guys. Can you hear me?
Yes.
Yeah.
Hold on. You can't see my screen here.
Yep. See the chart.
Still see the chart here?
Yes.
Yeah.
Wait, I'm coming. Hold on. Tell them to hold on. Coming, please. Hold on. I'm trying to share. You still okay? You guys said it's still on screen. Yeah, it says my screen share has been paused. Can you guys see?
It's frozen.
It's frozen.
All right, back.
So, still telling me it's paused. Okay, that's fine. Yeah. So what's going to happen is we're going to take that 20 minutes break now because I have the electrician here who wants to fix something about my lights. So it's not going to take too long and because he has to turn everything off. So let's take that 20-minute break now. The way next will come back. You guys can ask any question you're concerned about on structure, internal and external substructure. Then once I tackle those questions, then we jump into liquidity. Because that's the next part of the operation. Okay?
No problem.
All right, so let's take that 20-minute break. As soon as the electrician is done, if it happens before 20 minutes, as soon as it's done, I'll drop a message on Discord. So I'm going to end the call actually.
No problem.
So but before I do that, let me hold on, please.
Fine.
Before I drop